If you ask any investor what they're looking at right now, they're probably going to say Bill Ackman's tweets. And why wouldn't they? When he speaks, the market moves. I'm just kidding. But there's only been a handful of people who could move the market simply by speaking, and the market rallied almost immediately after he tweeted. But was the rally really on the back of his word, or was there something else going on under the hood? In today's video, we talk about what's going on under the hood. With the 2 to 10 year spread 14 basis points away from uninversion, we need to discuss what comes next. With 1/3 of the S&P 500 reporting earnings this week, these results will dictate what happens next for the rest of the year. Have we seen the lows for the year, or was this just an intraday short-lived short squeeze? Welcome everybody to the daily recap show where we talk about stocks and the financial markets. If you like this video, please subscribe, hit the notification bell. Let's get into it. If you want technology or communication services, you probably got sold off. Healthcare was down on the day, same with energy, materials, utilities. Financials, a bit of a mixed bag, but all in all, it was a broad-based sell-off if you want big tech. And this was probably investors piling into stuff like Microsoft, Google, Meta, Amazon on the back of the earnings that are coming tomorrow and Thursday. We can see here that all in all, communication services, tech, and discretionary, which discretionary is really just Amazon and Tesla, were up for the day, and almost every other sector was red. Energy performing the worst, down 1.62% for the session, but they have been performing the best over the last 5 days. If we actually look at every sector over the last month, GDX, gold miners, performed the best, up 11.17% for the month, definitely a flight to safe, as well as XLC communications up 1.38%, and the worst performing sector is solar right here, along with real estate, materials, and staples. They got absolutely hammered. Moving on to what commodities did for today. Energy, crude down 2.94% for the day, as well as Brent, so quite a bit of selling intraday. But then we look at gold and silver, again selling too, but that's because on Friday they performed very, very well. Looking at treasuries, we saw the short end of the curve, the yields move higher, the long end, the yields move a bit lower. So it still seems that people are still trying to get the this 5.5, 5.4% rate on these shorter bills, because that is very attractive. Looking at the day though, we saw the US 2-year perform the best, as well as the 30-year and the 10-year perform the worst. But all in all, yields did come down on the back of Bill Ackman's tweets, Fed Chair Bill Ackman. Looking at actual bond prices, and this is kind of crazy. This is the total chart, the monthly chart of the TLT. And we can see here that this right here, the highest volume on record for October, and there's still 7 days left or 5 days left in the trading month. So absolutely crazy. And when you see something like this, when you see huge moves to the downside and you see large volumes like this and price isn't moving much lower, it probably means that there's buyers picking up that supply. They're sort of like accumulating at this level. So we're going to watch TLT closely and yields closely for the next couple of months. I have been saying that I do think rates, at least for the interim, at least for the next 3 to 4 months, have topped. I do expect, the 10-year to get to 5.5%, upward of 6% in the next 8 to 12 months. But I think looking at TLT as a long-term play, this is very good levels. This is 10-year, 20-year lows we're seeing on the TLT. Now earnings, let's have a look at earnings, guys. We have a huge earnings. We have the big guys, Microsoft and Google, reporting after close on Tuesday, as well as Visa. Then Wednesday we have Meta, and Thursday we have Amazon. These are the implied moves for earnings. We can see here that Meta has the largest implied move, up nearly 8% or down 8% depending on what they're going to report. We do have Google right here, so as well as Amazon just below 7%. So it's a very, very big week for earnings, and volatility could be ahead. Now, 73% of SPX companies have beaten EPS estimates to date for Q3, which is below the 5-year average of 77% and above the 10-year average of 74%. So considering the macro environment, that's actually very, very good. But if you are missing earnings, the market is not liking it. This is S&P 500 firms that miss EPS sales estimates. You can see here when EPS and sales estimates miss, stocks are down 6%. And we can actually see here that when they beat, there's not much market reaction. But if you miss earnings, it's not looking good for you. And I can tell you right now that those big names, Microsoft, Google, Meta, if they miss earnings, volatility is going to absolutely spike, because those are real movers in the market. So keep a close eye on tomorrow's earnings after the bell, and Wednesday's earnings and Thursday's earnings after the bell. Are stocks a buy regardless? And generally speaking, you could probably say yes. Only 13 stocks are above the 50-day moving average. And I've highlighted times when we've gotten to these levels right here. 2015 rally. rallied. 2018, we rallied. 2020, huge rally. And again, September 2022, when we got to these levels, we rallied up. But that being said, data is data. And if you look at it like this, you probably are likely in for some form of a bounce in the interim. Moving on to backing that up, we can actually see here that even though the market has made lower lows in October, we can actually see here that the total US stock market index has had fewer new lows than October's third corrective low point. So long story short, we made a low here, we made a lower low on the index here, but actually fewer companies made a lower low. Does this mean you should invest in stocks right now? And that really depends. You can see here, this is the Treasury bill versus the S&P 500 yield. So the current earnings yield versus the Treasury bill yield. And right now, T-bills paying 5.5 is actually earning more than the current S&P 500 earnings yield. So cash is no longer trash. It's a good thing to probably have a decent allocation to T-bills, stocks, as well as just cash. Allocate accordingly. When are we actually going to see bond yields fall? Well, I got a bit of data here for you. This is the 10 to 2-year spread, which is 14 basis points away from uninversion. And this is the federal funds rate. When the yield inverts and uninverts, a recession, this gray line, normally comes pretty quickly, and then rates drop. This is where we are right now. Once this uninverts, we get a recession, and then rates are gonna fall. So that being said, our stocks are buy right now. This is where we are right now, pre-election year seasonality, and we're actually in textbook seasonality. We have come down here. Today we did mark a bit of a rally. This chart is about 3 days old, about 1 trading day old. Are we gonna rally for the rest of Q4? Let's have a look at the data. This is the S&P 500 performance from October 20 to 27, so the week we're currently in. 1973 to 97 versus 1998 to 2022. We can actually see here that from 73 to 97, generally speaking, we had a negative 1.51% in this week. But if we actually look at 97 to 2022, the average gain was 0.05, which is largely different to what this number shows there, which could skew seasonality data. And if you actually look at right here, this is a fairly low rate environment. That being said, what can we expect from this week? 17 up weeks, 8 down weeks, and we could probably expect volatility in the market moving sideways. And that's because 3 or 4 days after OPEX, the market tends to be very choppy. So that's just the week past. So this is some seasonality data we have right here based on what to expect for November and December. Now you can see right here that when we've had a January to October, which has been positive, but we've had a August, September, and October, which has returned a negative figure for those months. In November, we normally return 2.52%, and then in December, we return 2.48% for a total return November through December of 5.04%. We've had 15 up years, 3 down, and with a 3% move or greater occurring 14 times. So again, this is just some stats, but we can see here that seasonality is on our side, and we did see today that the market did sort of rally off the lows, but we need to see further action from the bulls to sort of confirm this as a whole. But it's good to look at stuff like this and base your trades. Let's keep going into the data. This is the Nasdaq Q4 rally 1971 to 2022, and we can see here that from the October low all the way to the year end, the Nasdaq normally has returned 9.5%, 88.5% of the time on average, and to the November to December high, it's returned 13.1% on average, 98.1% of the time. Very, very positive stats. We do see that the Q4 tends to be the best time of year for the Nasdaq, the S&P 500, and equities as a whole. Now let's get into some dark pool trades, guys. Let's have a look at some unusual options activity. Some of the biggest options trades came in from QQQ as well as IWM. The last 3, 4, 5 sessions, the IWM has had huge amounts of volume come through it. A lot more puts than calls for these ETFs, as well as Tesla seeing huge amounts of volume as well. But other than that, it was exactly the same like Friday. A lot of tech names, a lot of people getting trades in before earnings, trying to, play earnings maybe to the upside, to the downside. We also did see TLT with its large volumes come in at 1.3 times 90-day average volume. And again, TLT has been on here for a good number of trading sessions. More on the call side than on the put side. Very, very interesting. Yeah, I've been watching this and there's been a lot more put notional value than call notional value. Now moving on to total volume, we can see here that the most of the volume was in indices, broad-based ETFs, as well as cyclicals and technology. We sort of had, I would say, a fairly average day in volume. We did have 37 million. OPEX was on Friday, so it's to be expected that volume is just a bit low on the Monday. The average volume is about 40 million, just under 40 million. You see 52% calls to 48% puts compared to last week where it was flipped. It was 52% puts, 48% calls on the day. So very, very interesting stats right there. QQQ, we saw very big trades happen right here, then we rallied. No trades at the end of the day. Very, very interesting, which means these guys have held their trades overnight. Now, further to add on to that, the S&P 500, these are the 10 biggest trades for the day. And I want you guys to understand this. This is a late print. It probably happened around this area right here. If we actually have a look in this area right here, the 10 biggest trades for the day happened in this area right here. So we saw trades happening here as well as a late print, and then we rallied. And then we came all the way down, and then a ton of trades came in here. Could these be longs? Could these be shorts? Guys, I'm starting to think that these are probably longs looking to the end of the year. I think it's longs. I think these are probably buy. Would they short here? I don't think so. I think if they were going to short, it'd be around this area. As it stands right now, this does look like bullish activity. It does look like buy trades or trades at the bid. Moving on to IWM, bit of a mixed bag right here. We did see some crazy trades here and here at the end of the day, but then we did see buy right here, and then we rallied, and then we did see sort of a short. Now, here's what I think about this, right? I think this guy bought, rallied, and then closed part of his trade. Then we came down, all right, and then more big guys probably entered right here. It's yet to be seen what happened, but all in all, the action was to the downside. And that's everything for today. Thank you so much, guys. Please like, comment, share this video, subscribe, hit the notification bell, and let me know what you want in the comments. Have a good one.